Hey everyone, welcome to another episode of Trading Bitcoin with your host Tone Bass, coming to you live from Porcfest in New Hampshire. This is the Porcupine Freedom Festival for the libertarians mostly, and I was here last year for the first time. Had a pretty good time, met some interesting people, to say the least, and I'm here again this year. I got here yesterday. I spoke on a panel. Um, and oh, hold on one second. I was doing an interview, but we had all right, let me close that. Okay, so camera. Okay, focused. So I was on a panel yesterday with Jeffrey Tucker, a bunch of Bcashers. It wasn't really a debate, but I'm going to be very hostile towards these people now. So I made sure that I called the Venezuelan Bolivar more secure and less inflationary than their currencies. They didn't take that very well. There's videos of this, and Naomi Brockwell recorded it. It's probably going to be on her channel. So I will send that out. How many people we got? We got 500 live viewers. If you want to see, so this is where the event is taking place. That giant barn slash tent, like next to the tents, that giant airplane hangar looking thing is where the conference takes place. People are. This is where everyone is living. Right there in the woods. Just had a cup of coffee over there. I've been paying for my coffee with Bitcoin, $5 cups of coffee. I've been paying 25 to 30% transaction fees, and they've been getting confirmed, I don't know, within 12 hours or so. So you can complain about a 30-cent fee. I'd rather complain about a $5 cup of coffee. So, to each their own. All right. So, I believe Tyler is going to join me. I don't even I mean, we'll look at the charts in a little bit. I saw some very good questions already before it even started. I'm gonna wait for Tyler and look at the charts with him, assuming Tyler is gonna come on the stream. But let me take that out. Assuming Tyler is gonna come on the stream. And I'm also limited on battery power. Unfortunately, my computer wasn't fully charged. I'm charging my laptop. I'm also in market for a new laptop, which I'll be buying. But I already know which one I'm going to buy. I was talking to Lenovo last night. Unfortunately, there's one additional piece that I need inside that laptop, and they're not customizing the new laptops yet. And I'm like, shit, you only buy the pre-built versions. And I need one more thing inside of it. I'm spending like $3,000 on my next laptop. It's ridiculous. If anyone works at Lenovo, DM me. But other than that, yeah. So unfortunately, I gotta wait. All right, enough about me. So let's take a look at a couple of really good questions in the live chat already, and as I wait for Tyler. Okay, hold on. This is what I need. I wanna. Okay. Let me see here. Eduardo, hi Tone. Considering the history of Bitcoin, what is statistical probability of it in the coming weeks, Bitcoin reaching 20,000? That is an excellently framed question. Notice how Eduardo specifically says, what is the statistical probability? I mean, obviously, I can't tell the future, and my probability is just an educated, experienced guess or educated, experienced answer. But in the coming weeks, it's actually very high. Again, FOMO's setting in. People are going nuts. Shorts are being liquidated. The last time I looked at the charts, you saw that the shorts on Bitfinex were very, very leveraged. And therefore, those shorts had to be liquidated. Even though the longs were also leveraged, right? Like this could have really crashed either way. This could have like fallen $1,000 last night, or it could have went up $1,000 last night. It really could have gone either way. As a trader, you see which way it starts to move, and then you take the trade. So what is the probability? It's pretty damn high. But remember what Van Zandt said in our epic, March or April discussion, has the Bitcoin price bottomed, when Bitcoin price was sitting there just above 4,000 or just around 5,000. And we were on there with Willy Woo and Van Zen, the infamous Has Bitcoin Bottomed episode. And Van Zen said that he can foresee a scenario where Bitcoin goes to new all-time high while still being in a bear market. Now, that would be very, very bad, because for me personally, and especially for Tyler, I would get totally wrecked in that bull trap, right? Like for me, if we go above 20K, it is a new bull market. And same thing for Tyler. That's when my 1,300 gets fully eliminated. That's when Tyler's hyperwave $1,000 target gets fully eliminated. And that's when we start looking for $100,000 Bitcoin when we cross the 20,000 barrier. Now, for me personally, we don't really need to cross the $10,000 barrier. We just need to get, past the 62% Fibonacci line at 1,350 or wherever it is. So I would be looking for new all-time highs. I think 45,000 is my next bull target. But I'm still waiting for that pullback. And this market has been really, really bothering me. And it just has. It's I'll talk about it with Tyler a little bit more once he joins. But yeah, probability is high. All right, let me see if there's any other question. Eduardo again. Tone, is it possible on a large scale that we never actually enter a bear market? We just made a correction, and this year we can surpass 20,000. Analysis done with ADX and a monthly chart. Yeah, of course. So it's very possible that Bitcoin is on its way to 50,000, 100,000 and beyond. That would be very, very concerning. Now, I did not do a very good job selling my HODL position, on the run up in 2017 into 20K. I sold a little bit, and I felt bad for the people I sold it to, because I mostly sold to people that I knew. I didn't have the connections to sell to people that I didn't know. Then you don't feel bad at all. Like I don't feel bad about, selling. Let's say I sold Tesla at the very top before it fell 50% on the stock market. Like I don't feel bad about that, right? But when let's say my, I don't know, let's just for the sake of argument say, let's say my barber, right? Let's say my barber wants to buy a Bitcoin for me, and I sold my barber a Bitcoin at $17,000, and he's a friend of mine for 20 years, and I feel bad about that, right? Because now he's sitting on a Bitcoin that lost 80% of its value. All right, we got a couple of people joining us. Hey guys, we haven't gotten to the charts yet. We'll get to those later. You guys have to unmute, and I gotta make sure I hear you. Say something.
Hey, can you hear me?
I hear Tyler.
Great.
And Jimmy needs to unmute as well. And I hear Jimmy.
All right. Hey, how's it going, Tyler?
Terrific.
10,000, 11,000. This is insane.
It is insane.
I know. All right. Well, we got Jimmy. I don't know, how much time do you guys have? And unfortunately, I am limited on battery life. So I have at the most 45 minutes, my best.
I have maybe 30 minutes, 35 minutes. I have people coming over. I'm going to work out with some Bitcoin people at my house, but I need to do this show. I'm sure this will be very popular.
Yeah. We're already at 1,300 live viewers. If you guys want to tweet out that you're live with me, because I didn't know who was going to come on, so I didn't tag anybody. All right. Jimmy, what's going on? Like, honestly, you're here. I want to know, the tech side of things. Like, look, I've been a very hated person by the community over the last 6 months for continuing to wait for the pullback and actually selling a piece of my HODL position. I was just saying before you guys joined that I did not do a very good job selling my Bitcoin in 2017 to take advantage of the giant price rise, mostly because I have no exchange accounts. Like I like being off the grid. And in order for me to sell some Bitcoin, I need to, sell it to people. And the only people I could have sold it to in 2017 were my friends. And while I sold some of my Bitcoin to my friends, I really felt bad about it. I don't feel bad this time. Like, I think the current FOMO, especially if the current FOMO goes above 20,000, I am actually scared for the longevity of Bitcoin, because the amount of hash rate that's coming online, the amount of going into the halving, and then imagine if we never really bottomed, which I never felt that we did. Imagine what would happen to the Bitcoin ecosystem if we hit, $25,000, $30,000 and then drop to two. The way we dropped from $30 to $2 in 2011. It's not unprecedented. But if it happens after the halving, I think it will endanger the Bitcoin ecosystem from the mining perspective, from a security perspective, so much that it's kind of scaring me at the moment, this FOMO. What are your thoughts, Jimmy?
Well, as far as the actual hash rate, we're at the highest hash rate that we've ever had right now. Like we've never had more hash rate on the network than we have at the current moment. And you can look at the charts as far as how much hashing is going on. Right now, the mining ecosystem is very diverse. There's a lot of different manufacturers. It's not Bitmain anymore. It used to be mostly Bitmain. Now it's a lot of other ones. I don't know if you've seen some of these stories, but Bitmain is going after a lot of their competitors in court because they just don't have anything else at the moment. There's even a story about them trying to IPO in the United States because Hong Kong's basically not letting them. So there's a lot of hash rate already on the network, and it's cheaper than it used to be. And it continues to evolve. Now, it's not going at the same level of evolution that it was like 5 years ago, right? Like where we went from like GPUs to ASICs to like, that were at 128 nanometer processes all the way down to like 14. Now we're getting into like the 10 and 7 realm. It's like really, really high tech. So there's not that much more room to go. But it is still improving, and manufacturing processes are better. It looks like as we get up to the higher numbers, I think what will happen is that a lot of this mining equipment will get manufactured. Now, your concern tone mostly is that if we have a large price drop after that, are there going to be any people that mine? Well, a lot of this equipment, once it's manufactured, if you're not using it, then you're going to lose money regardless, and it's a fixed capital cost. A lot of the energy is actually kind of free at this point. You're going to like, you deploy these things like next to a hydroelectric dam or something, and usually they have excess capacity that they're not using because the distance from the hydroelectric dam to the city where it's actually needed, the transmission just like takes away too much profit, so they don't produce all the electricity that they could. By being sort of next to like a hydroelectric dam or something like that, you can essentially get the electricity for very, very cheap. So it ends up that the hash rate, at least at this point in Bitcoin's evolution, it is more, the downside on the hash rate isn't quite as much as it used to be. And I mean, there's still some there. And, like December 2017, there were people like in the US, like running large miners or large mining farms because they had the ability to make a profit off of that. You can't do that anymore. Like there's way too much hash rate. And if you have a Bitmain S15 even, you're not going to be able to, run that necessarily very profitably. So in short, I think there are enough market forces and enough different manufacturers and enough equipment that's out there that I don't think we need to worry about the hash rate being too slow or something like that. And remember, there's excess capacity in BCH and BSV that can be brought onto the Bitcoin network. As soon as it's like if Bitcoin drops a lot, those other ones will drop even more. And that capacity can, like if they're economically rational, they'll come onto the Bitcoin network. Of course, it might not be that way. I mean, Calvin Ayre might, control a lot of the BSV hash rate, and he's ideologically driven, so he might not ever move some of that. But as it is, you know, the mining outlook looks pretty good.
All right, Tyler, how much time do you have? Because I can throw more, you know, more technical questions at Jimmy before we get into the price discussion. But if you're pressed for time, we'll visit the
No,
price first.
I've got plenty of time. No problem.
Anything you want to ask Jimmy on the tech side? I mean, both I've been on both of your channels talking about the Facebook coin, and I know I've had a lot of interviews on that since then. I mean, well, let's see if it actually goes to market. Let's see if the governments will even let them launch it, right? Like
there's two very interesting articles on Bloomberg this morning. One of them is the 5 things we know about Libra, and the other is the 5 things we don't know about Libra. But more importantly on Bloomberg was Mnuchin's comments yesterday, and I'd love to hear Jimmy's take on this, because I know Jimmy is anti-regulation to the max, as I think Tone is not quite that far. I'm probably closer to Tone than to Jimmy. But Mnuchin says the guidelines, this is yesterday, Mnuchin says guidelines move crypto firms from the dark shadows. And basically, there's been a financial action task force among 200 countries that's been going on behind the scenes. Treasury Secretary Steven Mnuchin voiced his support for new global regulatory standards to combat illicit financing by criminals, terrorists, and rogue nations that will have major implications in the world of cryptocurrencies. Mnuchin spoke Friday at Orlando, Florida, gathering of the Financial Action Task Force, a multi-government effort that develops recommendations for combating all this bad stuff. The guidelines require companies, all companies worldwide, to collect information about customers and the recipients of funds, and to send that data to the receiver's service provider with each transaction. By adopting the standards and guidelines agreed to this week, the FATF will make sure that virtual asset service providers do not operate in the dark shadows. This will enable the emerging fintech sector to stay one step ahead of all these bad players. And then he goes on to name the 200 plus crypto exchanges, many of which operate purposely in lightly regulated jurisdictions such as the Caribbean. And then he goes on to say that almost all of these are going to be unable to provide or willing to provide the information that will be required by these governments. Jimmy, what's your thoughts on all of that?
Well, there's a reason I don't really pay attention to regulation, because that stuff bores me to tears. Oh my God.
I know.
I do understand that the government's going to want to control something centralized like Facebook's Libra coin. And this is the main vulnerability that all of these centralized coins have. And honestly, Facebook coin is or Libra is not that different than everything other than Bitcoin. Ethereum can be regulated the same way. Zcash, Monero, or like pretty much everything can. And the fact of the matter is, if the government wants to, they really can go in and regulate it and control it and say you need to do this and that. With Bitcoin, it's decentralized, so they can't shut down the network. They can make it very difficult for like an individual to do things. But you know that means that you'll go through some level of regulatory arbitrage to be able to get access to your wealth. You know, if they confiscate gold, you know, there were a lot of people that went to Mexico because they were like, hey, you know what? Like, if they're going to confiscate my gold, screw you. I'm going to go somewhere else where I can preserve it. Now, of course, that was part of the whole, you know, dollar hegemony plan that the U.S. had post-World War II, or I mean, pre-World War II and post-World War II, the dollar like gained prominence and became eventually, when it was cut with gold, when it cut its ties with gold, there was oil was priced in dollars, so everyone was forced to pretty much hold some dollars. that hegemony, I think, is, I mean, slowly coming to an end, and that's where Bitcoin, I think, can really thrive. The regulations themselves are not surprising. The only thing that people are really worried about is if they regulate Libra, then there might be collateral damage in terms of regulation on Bitcoin. I'm not too worried about that. I think there are enough people in government that have Bitcoin that they want to protect their own assets. This is similar in China to some degree, except the bribery and special treatment is a lot more blatant over there. So they can ban it for everybody else, but the elites, they get to use it or whatever. So I don't particularly see this thing as as something that we need to necessarily worry too much about. Regulation's going to be there. There's not really that much we can do. But then again, in the U.S. at least, the administrations change, and once Bitcoin starts hitting an all-time high, there's going to be a lot of wealth in Bitcoiners, and a lot of us are going to fight to make sure that we can keep doing what we want. So, I mean, this is why you're there at Porcfest, aren't you, Tone? Like to see how people feel about this stuff and political action in that regard, and so on.
Yeah, no, that is true. But like, man, was this place infiltrated by Bitcoin Cash and Dash and God knows what else. All right, so this Facebook coin, man. So it's amazing how hostile the governments have gotten about this Facebook coin, even though it's like it should be good for them, right? I mean, in a way, governments don't like a corporation making money. Or making, corporations making private currencies, but these private currencies are still, in line with government thinking, and at least the government can work with them on that thinking. And now that the governments are getting so hostile to Facebook's coin, and just keep in mind, Saifuddin is absolutely right. I saw his tweet storm yesterday. Their coin can do a lot of good to the developing world. Like, it's better than what they have now if they get on the Facebook coin. It's significantly better than their currencies controlled by like a single person and not really a democracy. So it's better for them, but the governments don't care about that. Like, the governments don't care for a stable currency for people, especially in third world countries. And they're getting very hostile towards the Facebook coin. And what Tyler just read basically tells me that they're going to get very, very hostile towards the cryptocurrencies. And when they realize there's nothing they can do to stop Bitcoin, we'll see how it ends. So the situation does worry me in how they're all reacting to Facebook coin. And the irony is, like, for the little bit of good that the Facebook coin can do to the developing world, they really are the worst of everything combined, right? They are going to be terrible technologically because they're taking on all the disadvantages of decentralization without any of the disadvantages because they're not going to be decentralized. And they're telling the government that they are decentralized when they're not. So they're getting this wrath of, you're creating a currency for, bad people, when in fact they are not, because Facebook can do KYC AML better than any single government because they have like everything there is to know about 4 billion people, right? Like, through their platform. And so they're taking on these two fights, a technological fight that they can't win because they're never going to be decentralized, and a political fight that, like, they can't win because if they publicly tell the government, wait a minute, we can do all the AML KYC, then they lose the public trust of, lying to the people that they're a free currency. Like, it's just like going to be a giant mess. But if they can navigate that giant mess and actually pull off their currency, I don't know what it will do. And it depends how hostile the governments get. Facebook can also, try to use their influence in the government around the world to try, hey, you got to help us kill off all of these cryptocurrencies in favor of ours because ours will cooperate with you. But they can't say that publicly. They can only say that privately. But how do you say it privately without it getting out that you're saying it publicly? So It's going to be interesting where it goes. I think the story is about to die in the next like month or so, and then we wait for something to actually launch.
Yeah, I mean, I think it's at this point I would put odds at like 2-1 that they never launch anything. Just from like all of the pushback and stuff like that. Facebook has a lot of difficulties regulatory wise, pretty much everywhere in the world. And everybody, like you have to realize, pretty much every other government thinks that Facebook is an arm of the U.S. government and that they get to surveil on all of their citizens. The U.S. gets to surveil on everybody else's citizens through Facebook. And this is why China has pretty much banned Facebook at this point and stuff like that, because they don't want, the Chinese government wants to surveil their own people. They don't want the U.S. being able to do the same thing. So in many ways, I suspect that this is not going to take off, that it won't launch. I mean, they have been working on it for a couple of years, but a lot of people forget, like most new products from big companies are not successful. I mean, Google's tried like 3 or 4 times to launch a social network. Doesn't mean that it's actually going to happen, right? Like Google Buzz and Orkut and Google Plus and all of these things. None of them have done anything, and they keep like basically canceling all of these. Similar thing with this particular currency. This is not their first one. Facebook Credits was around back in 2011. And that was a way to try to value capture off of the games that were popular at the time. But I mean, I don't think any of these things go anywhere because in large part you need to have a very strong will to go and do it. True, David Marcus is there. He's the former president of PayPal. That's now the VP of blockchain at Facebook. But at some point he's going to run out of political capital, and they're going to be like, "Why the hell are we doing this? This is costing us way more time and money and engineers than we can." That could be better deployed on ads or clicks or whatever it is that help Facebook make money. And shareholders are going to get upset if they keep pursuing this, and it's like a giant money draining hole, which at this point I think this pretty much is. People like Andreessen Horowitz and Union Square Ventures, they're excited about it because they might be able to make money off of interest or something like that. And they're probably excited at the prospect of being able to do some sort of fractional reserve banking, which is inevitable to these things. I find it hilarious that they're pegging to like 5 or 6 different currencies. Those pegs historically, by any central bank, they tend to break. And it's because they start playing games with it. And if you have somebody's hand in the cookie jar, that tends to happen. So I don't think this is Facebook's core competency. I don't think this is something that they're very good at. I think it's 2-1 that it even launches. Like a year from now, we're probably gonna see like a very short headline somewhere saying Facebook abandons its Libra coin, and everybody goes back to Bitcoin.
No, you never see these headlines. Like we never saw a headline how Google abandoned Google Glasses, right? Like, they just let them. They just let them. They just let these things die out.
It's usually they give some sort of notice that they're no longer going to support whatever they've already started. So it'll probably be an announcement that the API for the testnet for Libra, it will be deprecated as of December 2020, something like that, and then everyone will figure it out.
Yeah,
that's how they abandon everything.
Like I have no idea what R3 is up to these days. All I know is they should have printed $300 billion like Ripple did, and then they would be able to compete. Which is why if I was R3, I would be paying for, and if you still have some money from all those banks that paid you $100,000 each, I would be using that money on lawyers to fight the Ripple case to make sure Ripple is classified as an illegal security and get all those fuckers arrested. And then R3 could
How would that help R3 though?
Oh, they have the same business pretty much. Only one has a scammy token that gave them an advantage in financing.
Yeah.
Yeah, I'll take a little bit different stand than Jimmy did. I think Libra is not going to have that much problem. at least getting it launched. They do have 20 major organizations now, and the chairman of Citibank said he is considering joining as a member. And I think a number of major banks will do that. But that's just an assumption on my part. What I find interesting in this Bloomberg article, when they say there's 5 things we know and 5 things we don't know, one of the things that's unanswered is it says Libra is not necessarily intended to appeal to the crypto faithful. Instead, it's targeting the 1.7 billion unbanked people globally. With Libra, they'll be able to have something similar to digital bank accounts at companies like Facebook. The problem is, unlike traditional banks, it's not clear that these accounts will pay interest on deposits. Most other digital wallets for holding crypto don't pay interest. Facebook emphasized that it doesn't provide banking services. So the fact that they've joined with probably the largest charitable organization in the world, Mercy Corp, which I think their appeal to countries and regulators is not for the crypto crowd. I think it's for all of those that can't get to banks or have banking accounts. Now, if that's true, and it's not just a cover for something else, then I could see a lot of support politically. Now, obviously, they didn't get any in Washington after they announced it, which was very surprising because they have claimed that they've been working with regulators for the last 2 years. And it almost feels to me like the Fidelity Project, the Fidelity Digital Asset Group that is now launched. They've been working for 3.5 years with regulators to make sure that everything they did bringing Bitcoin to the public would be done with the nod of the regulators and the acceptance of the structure that they've put together. So to me, we've got some competing values here that in no way will hurt Bitcoin. In my mind, I think what Jimmy just said is very important, that regardless of what happens here, we should see Bitcoin dominance continue to increase. But what we're talking about with Bitcoin dominance is within the crypto crowd. It's not outside the crypto crowd until acceptance and adoption really start coming along. I think Libra could get in the way of that acceptance and adoption. If it actually is launched, if they get 100 members, if those members are not, I like the fact that Visa and MasterCard, 2 competing entities, are both part of the project. I like the idea that a lot of the PayPal people have left PayPal to join Libra. And for obvious reasons, because David Marcus, brought them over. But what my point is that this appears to be something other than simply another attempt at getting into the crypto space. I think it's much bigger than that.
All right. Hey, guys, I do want to move on to the price. I will just throw my final 2 cents on this Libra thing. If Facebook really cared about these people in developing countries, and as they say, we want to bring, financial services to these people that don't have them, all they had to do was not, just launch the damn thing. You have access to these people. They all use Facebook. Just open up a freaking bank account, your own bank account, and allow people that have Facebook accounts to send Facebook dollars to each other, where $1 Facebook dollar equals $1 US. You didn't have to make an announcement. You didn't need a white paper. You just needed a button on people's chats, hey, send Facebook dollars, which are backed by US dollars, from one person to another through your Facebook account. They could have just did it, okay? And that's it, and be done with it. Like, they didn't need this whole fanfare thing if they really cared about those people. Anyway, okay, let's move on to the price. We have 2,200 people watching, and let's. I mean, I don't know what else to say other than we're going higher, and there's no stopping it. Now, with every as we continue to just rise and rise and rise, I'm like, this is making me very, very nervous. This is, and there was a couple of good questions. One of them was, hey, Tone, there was 2 consecutive 9s on a weekly, and now we're going higher. Well, the second consecutive 9 did give you a correction. It just wasn't a correction that was big enough that I was looking for. I was looking for the correction to maybe not necessarily bigger. I wanted it a little bit bigger, but at least I wanted it longer. There's always time and price. Now, the other thing is, on a weekly scale, the weekly 2 went above the weekly 1 as it broke the 38% Fibonacci line, and we are a spitting distance away from the next Fibonacci line, which is the 50% line. Now, I normally don't care about the 50% line, but it is coming in at 11,400, and I wouldn't be surprised if we hit it during this podcast at this point. Now, the next critical point is the 13,350 area, which is the 62% Fibonacci. But all of these things, all of these areas, they're kind of meant to be useful in an orderly market. This is not what I call an orderly market. The best thing I can really compare Bitcoin to is the NASDAQ itself, like the entire NASDAQ. And this is why when Tyler and I talked about the hyperwave in the past, the hyperwave was one of those examples. Oh, sorry, the NASDAQ was one of those examples that did not go back to phase 1 of the hyperwave, and Tyler and I discussed it at length in the past. And this is why I, would have been okay with Bitcoin having a bottom, not at 1,300. And when Bitcoin was reversing from 3,000, we did have that chart saying that, hey, my only reason for saying 3,000 is a reasonable bottom was the fact that mining profits did, reach its levels because of the halving. Anyway, I'm not going to rehash all of that. Now, I still thought Bitcoin, based on the way the price action was playing out at the end of 2018 going into 2019, told me that we're probably going to go a little bit lower, and it wasn't going to be this easy to get out of the bear market. Clearly, it looks like we potentially got out of it. But this unprecedented rise, it's not like, look, it's not healthy. It's not healthy for the market. It's not healthy for any market. You didn't see the NASDAQ do this when it finally bottomed out in 2002. The NASDAQ took 15 years to get back to the top. Even if Bitcoin is, even if Bitcoin moves 3 times faster, it shouldn't move 8 times faster. So to me, this rise is very, very unhealthy. And the last time we had an unhealthy rise, we fell from 20K down to 3. And if this unhealthy rise, I don't know where it's going to top. All I can do is use my TA tools to say, hey, it's all bullish across the board. The weekly is clearly bullish. We broke a serious level of resistance, even though we have to close above it. But we can close above it all the way at $80,000, right? The way it's rising, because Bitcoin is pretty limited, but it can also fall just as quickly. The daily, as much as I didn't like it yesterday, in that I never trade green 1s above green 9s, I wait for the green 2 to go above a green 1. Yesterday's day was very, very extended, but if you automated the TD sequential, you would have bought in at 10,200, and now you're $1,000 higher within 12 hours. So now I would have been cautious, but a bot doesn't care. So according to bot trading using sequential, there was a long trade on a green 2 following a green 1 following a 9, And now I have to anticipate a double 9 on a daily scale. But if we continue to rise at this pace, that could also be in the $40,000 range that no one really knows. But all I can say is, at the moment, based on my TA, the weekly is bullish, the daily is bullish, the 12-hour is on a combo 13 sell, but like, look at your metrics, everything is bullish. It's on a 6 of 9. So, and you could get a 913 coming up in a couple of candles. So the 12-hour is still bullish, but not far from a top within a day or two. The 4-hour is working on a third consecutive 9, though the second consecutive 9 did pull us back. There is a sequential 13 coming, but it will probably be ignored because all the higher level timeframes are bullish. The CMF is out of control. Clearly, everybody's buying into it. That was the 4-hour. Here's the 1-hour. I had to restart my computer, so charts are taking a minute to load. So all the timeframes are bullish. So the only thing I can say is, if you're holding Bitcoin, keep holding it and wait for a top to sell it. If you are a short-term trader, it depends on what you're using to trade. I like to use sequential. In this particular instance, there was also a breakout of an ascending triangle that people were posting in my group chat. Here's the hourly chart. The hourly chart isn't going to top for at least 3 more hours. So at this moment, as we're doing this video, it's bullish and it's rising. And I wouldn't be surprised if we hit that 50% Fibonacci line at 11,400 while we're still streaming this podcast. Tyler, your thoughts?
Could you pull up the monthly just very quickly, because it's also very bullish, and it's early in its count, which is pretty scary when you think about it.
It is. The monthly is now, no, wait, that's the weekly, sorry. Yeah. So there it is.
Exactly. So it's just getting started. It's saying it can keep doing this until the end of the year. Basically, I think this region between 10,000 and 11,000 is pretty important. If we, on a short-term basis, run into problems around 11.4, just meaning hit the Fibonacci number, which, as Tone said, could happen before I finish this sentence, then I am expecting the 10,000 to 11,000 band to provide resistance. And I believe we drop back into it, and I think we struggle at that point. So I would not be chasing this slightly above the 11,000 line. I have said repeatedly in the last month that after we bought down at the $6,500 level and sold half of it at $8,800, that I'm looking for a place to get out of the other half. That is not true anymore. I am convinced by Consensio and by the Copic curve on a long-term basis turning up and the ADX on a long-term basis turning up, that this is for real. And by for real, what I mean is that Ven Zen had been talking about the possibility of running to 10,000, 12,000, 17,000, maybe all the way back up to the old highs. But he does not believe that this is the beginning of another super move. So far, he's been correct. He might turn out to be correct. And hyperwave is still in play, going all the way back down to 1,000, but not at this point. At this point, the amount of momentum behind this move deserves, and it will be very bullish if we get a pullback. I doubt if we can get back down to the 6,000 to 7,000 range, but we could easily get back down to the 7,500 to 8,500 range. And if we were to do that and hold that level and take a little bit of time, the way Tone has been looking for, then we are set up for a massive bull market for the rest of this year. And therefore, I'm not going to be getting out of the Bitcoin we have on a pullback. I'm going to be adding to it under what we're seeing right now.
I don't know, Jimmy, I don't know if you want to mention anything, but I have a really important question that Tyler and I are going to probably struggle with.
Well, I mean, you were saying you were concerned about all of these nines and all of the bull market. I mean, I think that kind of points at the fact that this is a new asset class, right? Like it's very different than anything that we've seen. And you know, like having massive bull runs like this, as it sort of becomes more widely adopted, is to be expected. There are a lot of rumors right now that because custody solutions have come so far in the last couple of years, that you know, a lot of this accumulation might be by institutions, and ain't no FOMO like institutional FOMO. And if that's happening, oh my goodness, this is we really could go way past the new all-time high and go really crazy. But yeah, I mean, this is what technical adoption kind of looks like. It's multiple S curves. This is the sweet part of the S curve, obviously. And you see more and more people adopting. That's what it looks like to me. And price tends to be a pretty decent indicator of adoption.
Yeah, no, that's pretty well said, Jimmy. And we don't know. Like, I don't know. It just doesn't. This move just. I have no other way to say it than this move just doesn't feel right. Like the 2016 and 17 bull market was different. Was so different to me than the current one. And I'm still being a little bit cautious. But I am looking to cash out here on this move, and it just doesn't feel right to me. Now, here's the question. I'm going to actually take off screen share for a minute, though I do want to look at traditional markets with Tyler after as well, while my battery on my laptop holds up. And I am getting some questions in the live chat. I'll get to those later. So Tyler, so here's the big question, right? So if a person, and I sent out a video like over a month ago, and it was like a 2-minute clip trying to explain to people, are they ready for a $1,000 Bitcoin or a $100,000 Bitcoin this year? And you really need to have a plan to cover both of them. I had a plan to cover both of them. A part of that plan was that I was holding on to my HODL position throughout the bear market in case some insanity like this was to happen. So that's how I was prepared for the $100,000 Bitcoin. I was also prepared for the $1,000 Bitcoin. I was prepared for it mentally by setting up my businesses and setting up my life so that I'm not living in a cardboard box if my life savings go down to almost nothing, because Bitcoin went down to 1,000. And in fact, preparing to like sell assets in order to buy all into Bitcoin at 1,000, even though I happen to be already all in Bitcoin. So now the big question is, if a person wasn't ready for this ascent, and a person, let's say, sold all of their Bitcoin, let's use a $5,000 round number. A person sold all of their Bitcoin at 5,000. A person has no Bitcoin. A person is a fan of Bitcoin. And they're not an active trader. They're more of an investor. What do they do now? This is the big challenging question, because that person wasn't prepared for a sudden rise in Bitcoin to 100K, like some of us were. What does that person do before he goes into a total depression?
Well, you definitely don't chase this market if you're all in cash, but you want to get in. What you should have done is you should have bought when it broke up above 6,000 so easily. Now, you could have done it right after, between 6,000 and 7,000, or you could have been patient and waited the way our clients did. After it ran to 8,200, we put in buy orders down at the $6,500 level, and we were lucky because we got them all filled. If you didn't do that,
yeah, Tyler, you really did get lucky, because there was this weird flash crash for no reason.
It was a 2-day event, and it could. I still think that if that flash crash hadn't taken place, we still would have gone down and tested that 6,000 breakout in a more orderly fashion. Because the flash crash did happen, we didn't need to go through that whole process. So the luck was picking the right spots at how far it could go down, and knowing that that 6,000 would probably be very strong support on any kind of a move down, including a flash crash. So there's a little bit of art and a little bit of science to it, but in any case, it worked out. But your question is, if somebody didn't do that and now they sold out back, let's say at 5,000 and sitting in cash, do they put their money in here at 10,000? My answer is absolutely not. You don't do that. What you do is you put in buy orders starting at 7,500 and working your way up to about 8,500. And they sit there on the books. Now, if we do blow through 11,000 and close on a weekly basis above 11,100, I'm a little different than Tone. I don't think 13.5 or 17.5 are going to be that big of a problem to get through. To me, this 11,000 to 11.5 is going to be critical. So one of two things is going to happen, and you need a plan for both of those things. If this is the end of this pulse that has gone basically from 8,500 to 11,000 plus in a very short period of time, that's a pulse. Like all the other pulses, think of them all the way from 3,000 to 4,200 and back, 4,200 up to 5,300 and back down to 4,200. 5,300 up over 6,000, all the way to 8,200 and back to 6,000. Those are called pulses. We are getting close to the end of a pulse, probably. And because of that, if you are still in cash, you've got the probability of being able to buy lower. So think about that. But there's a flip side to that. What if that is not what happens? What if we blow through 11,500 and keep going? Then you want to buy above 11,500 on a weekly closing basis. That might be 12,000, might be 12,500. You might be saying, oh, geez, I should have bought at 3,000. Like everybody criticized me, you should have told us all to buy at 3,000 instead of 6,000. You would have saved us $3,000. Yeah. But now we've gone from 6,000 to almost double that. So I never worry about buying new highs, just like I have just bought fully into the US stock market yesterday. I just bought into gold, into a full position of gold yesterday, but we're buying new highs in those cases. Don't worry about that. That's the best time to buy. Trying to pick a bottom means what you're doing is you're putting cash, safe cash, into a new asset, and you're trying to pick a bottom. Forget the first $3,000 of that move. Wait till you've got confirmation that there's actually a move taking place. So that would be what I would tell a new client that is not yet in it. Be patient. You will get an opportunity, but you must be prepared for it. Don't let it go from 11,000 down to 7,500 or 8,000 and say, oh, it's dropping again. I'm going to wait for 6,000 or 5,000 or 3,000. That might happen. So you're not going to jump in at 7,500 or 8,500 with 100% of your money. You're going to start like we did with 20%, and then you're going to add to it if you're right. You're going to subtract from it if you're wrong.
All right. Thanks for all that, Tyler. And I generally agree with you, but the biggest factor that I agree with you on, I am not chasing at these levels. But again, I am a little different because I have Bitcoin. So,
right.
Look, it's going. I do think that 13.4 is going to be critical, and because I do like that 62% Fibonacci line. It usually holds prices back. And there was another question that's perfectly in line, which I'll read because it helps me answer the question that I posed to you. And the question is the following. Tone, is it enough to just have a higher low to confirm a bull market, or we also need a higher high after a higher low. We also need a higher high after the higher low. And I think that's going to be the best buying opportunity for Bitcoin. I continue to wait for that pullback. I continue to look for, a 40 and approximately a 40% pullback. So now we're sitting here at 1100, 11.1. Now 11.4 is that 50% Fibonacci line, but I don't honestly think it's going to do anything at this point. 13.4 is likely, so 40 to 50% off of 13.4, that's close to $7,000. That's a 40 to 50% pullback from that level. I am still looking for that level. Now the challenge is going to be spotting where that pullback is going to reverse. So I continue to look for my 50% drop. If that 50% drop, comes from 13.4, it takes us down to 7. You got to try and properly time that 7 and then add to that position upon the break of the swing high, which could be as high as 13.4. Now we could always reverse at any moment because I think this is, an unsustainable move up. And I will continue to look for that pullback. I wouldn't chase it here. But that's like the best advice I can give because I think that people should have been ready for $100,000 Bitcoin any day. And that's what I continue to tell people. Like I always said, the best time to buy Bitcoin for the long term was yesterday. Tyler and I debated whether dollar cost averaging is good or not. I'm okay with dollar cost averaging for people. So you and I did have, like, as similar as we are when it comes to trading, we did have slightly different advice for people, but I'm with you. I would not chase these levels, but that's also experience as a trader and investor. Nothing good ever happens when you chase. There's always another. I know there's not going to be another asset like Bitcoin, but this is why you're supposed to have some on a Trezor that you can't access.
Jimmy made a great point about it feels like this might be institutional buying, and if so, watch out. I disagreed with a lot of people about Fidelity coming online with their digital asset group. I think it's one of the biggest news items for Bitcoin in a number of years, not because it's a big regulated institution, but because it's a privately held, family-run company with $7 trillion in assets, the largest in the world. I've worked with him for 35 years. Almost all of my discretionary clients are at Fidelity. All of my big institutional pension funds were at Fidelity. 100 million, 300 million, 500 million single accounts at Fidelity. And it's because they do everything right and they are very careful before they launch something. They started mining Bitcoin 4.5 years ago to understand how it all worked. And then they started building this infrastructure that only now is being launched, and it's only for Bitcoin, and it's primarily at the beginning only for institutions. So nobody's going to tell us from Fidelity or the institutions if they're in here buying. What I'm saying is, for the first time, institutions have confidence in a major institutional player holding, securing, insuring, putting in cold storage, exchanging dollars for Bitcoin. And that might be part of what we are seeing.
Willy's here.
Joined by Willy Woo, who is currently muted. I am very curious on what he has to say. And Willy, unmute. And we just have one question. Jimmy is suggesting that this run-up could be institutional buying. I am skeptical that it's institutional buying. Have you seen anything in on-chain volume that may justify institutional buying? It has what is it telling you?
We did some new kind of metrics the last month to look at the size of the buys on the transactions, and it seems like it's retail FOMOing. It's the smaller players, but it's really difficult to tell these days because you know, these new custodial solutions there where a lot of the stuff can happen off chain, and we don't have a very good read on that. You know, if you database transactions without any private keys being swapped, coins not moving on chain, and they could represent very large very large volumes. So you know, if you look at the MVT caps, which is one of the charts that I have in the price models, you can see for the very first time the price is leading on-chain volume, which normally isn't the case. Usually on-chain volume leads price, right? Investors come in and that tends to reduce the supply, and then the exchange price follows. And this time it's the other way around, and I think the explanation for that is that we're not picking up a lot of this institutional buying, and even the long-term kind of hodling on exchange. What we are seeing is a general growth since 2017 of more and more volume being stored off-chain on exchanges. And so that could explain why it looks like price is running away above the MVT caps. But if I was to show you a chart of my personal MVT caps chart, which isn't, you know, on the public site, I could show you how healthy the investment volume is. Maybe I can share that.
Yeah, you can share it. You can send me the link and I'll share it. It's up to you.
Yeah, it's sitting on my computer. Let's just see if I can share it. Okay, looking for the right window. Yeah, there we go. Is that working?
It is.
Okay, so like essentially the red lines is it's kind of looking at the volume moving on chain. You consider the volume on chain as really just a proxy for people buying in to invest. You know, I send you $1 and then you give me $1 worth of Bitcoins that ends up on chain if it's long term. And so the different lines here represent different moving averages of it. So obviously the faster moving ones are the short term averages, and versus the long term, you kind of create this fishnet. And what you're seeing is the shorter term moving averages are climbing much faster and accelerating away. And this is exactly what we want to see in a bull run. You know, we come out of this sort of bear market and everything swings, all the volume swings upwards. And you see that here happening in, can you see my cursor? Oh, here we go. You see this, what's happening here is that flip happened, right, in the accumulation zone way back. I know we had that big debate. You see this flip happening in this region here, and then accelerating away. That's happened in every bottom. And right now what I see is something more akin to 2012, where we had this move. Let's see if that, yeah, it's pretty, I'm just trying to get, yeah, well, that blocks all the view. But you can see in 2012, we had this really nice run up with the investment volume not really skipping a beat. And that's actually what we're seeing right now. So I don't see anything that's off. I don't see, you know, people are calling for a 30–40% retracement at 11,500. I mean, that's a technical call. All I can see is on-chain activity looking very, very healthy. And I'm kind of with Jimmy. Like, we had a lot of money sitting on the sidelines wanting to buy in, and now that it's running away, there's very little Bitcoin to go around. And really is Bitcoin that people want. Ethereum somewhat, but on this time round, you know, if you think about the types of people that are coming in, it's the mums and pops that are starting to buy. and they will be buying through their brokerage accounts. And then there's the very large institutional money, even I'd say in this cycle, the very first of our sovereign wealth money coming in. And really, it's only going to be Bitcoin that's going to hold the liquidity, and that has the infrastructure for them to hold and store those buys. So a lot of the money is going to be attracted to Bitcoin, which is going to be by and far the largest liquidity pool. So unlike this zone here, where in the 2015-16 zone we got out the bear market, Bitcoin was in kind of that scaling war strife. A lot of people didn't know what the future of Bitcoin was. The SegWit was sort of hanging around for a long time, and a lot of questions. All of those questions are now no longer issues. And on top of that, we saw a lot of money start to flow into altcoins in 2017 when people thought Bitcoin might be dead and it wouldn't handle the throughput, that kind of thing. And a lot of those shadows are gone now. So and if I add to that the kind of accumulation we saw in this bottom is much more akin to what we had in the 2011 cycle. It's not as compressed as this zone here. Definitely not as spread out as this last cycle here. It's somewhere in between, and that's exactly what we're seeing right now, is a price climb that is somewhat steeper than what we saw in the last cycle and closer to what we saw in those earlier cycles. It kind of speaks to the demand and supply.
Hey, Willy, so a follow-up question, since you briefly mentioned it. What are you seeing in Bitcoin versus other category? Like, are you seeing any demand for these shit coins, whether it's Grin or Beam or, you know, Monero? I mean, Litecoin is on a different level right now because of the halving. You mentioned Ethereum or Cardano. I know you keep an eye on, you know, the shit coins, and someone sent me that site, coinmarketcap.io, and I absolutely love that site. I want to jump on.
It's crap market cap or something.
Oh, it's crap market cap. All right, let me.
I can't remember.
I'm gonna steal screen share for a second. Is it crap?
You do it. You do it.
Market cap.
Coin market crap. Coin market crap.
There it is. Coin market crap.io.
.com, I think. I'm not sure.
Is it .com?
Yeah.
Could be .com.
I mean, I would say we've already been seeing
that's
like altcoins are pretty screwed right now.
Oh, it is IO.
It is IO, right? So what did I misspell?
No, that's right. I think that's right. I get it on my computer. I don't know why you're not. Yeah, there you go. No, that's not it. Coin market crap. It looks like coin market cap.
Oh, yeah, I forgot I typed it, but it didn't.
Yeah.
There it is. Let me do that again.
You're gonna have to type it in because it's gonna correct it to coin market cap.
.io.
Yeah. There you go.
Huh. I don't, for whatever reason, your DNS.
Yeah, not sure.
Yeah, not working on my end.
I'm gonna all right, cool.
Your internet might not be.
I'm gonna steal the screen share again. I mean, this is definitely the cycle where everyone gets to see what really shitcoin really means.
Right, so
let me turn to screen sharing.
So Willy, so you do see Bitcoin separating from the shitcoins, which was one of my mandatory criteria for the end of the bear market.
If you look at the charts, I mean, pretty much everything is down against Bitcoin.
Yeah.
Other than maybe like,
you guys see my chart? I don't know.
Yeah, we got it
on the screen. Okay, so this is kind of my, like, this chart is kind of my alt season indicator. I just made it up just recently, but so on the top. The bottom is, you can recognize that as the Bitcoin price, correct? Yeah. So this top chart is essentially the combined altcoin market cap divided by the Bitcoin price. So it kind of roughly, it's not perfect, but it roughly translates to how altcoins are doing against Bitcoin. And so obviously we had this crazy 2017 and then it's come back down. It's sort of sitting on the support. What I want to see if alt season comes in is it to break this red line. The red line is the 265-day moving average. We've seen that, here we go. We had a Bitcoin peak in the tail end of 2017, and we saw that altcoins, they actually fared okay. They sort of came back up, but then they came back up in the second quarter of 2018, and that kind of relates to, I remember the ICOs were doing very well. They were still raising billions in the first quarter of 2018. It took a while for the markets to realize this stuff was crap, and then we started to see this collapse happening in the tail end. This is the collapse against Bitcoin, and it's been grubbing along the bottom since we pulled out of the accumulation ban here in Bitcoin down here. It's been pulling back down. It's actually threatening to break below these supports. I don't know if we can call that a support because I'm not sure about these charts, but it certainly will way away from breaking this red line. I'm very, very bearish on altcoins. I was talking to Travis of Ikigai and Phil Bonolo, saying, guys, I'm so bearish on altcoins. Please, please, please convince me of otherwise. You've got same story, institutional money going into Bitcoin. You've got mums and pops and going in through brokerage accounts on this cycle. What is the argument for altcoins? And he said that we only know what's happening in the West, and we don't really have a handle of what's happening in the East. And Asia loves altcoins. We saw that in the last cycle. So I don't know what's happening there, but certainly we haven't seen anything in the price action to justify deployment into alts. I'd want to see an uptick, but yeah, I'm super bearish. I'm like, yeah, I don't see a lot of action happening in altcoins in this cycle, and I can almost guarantee there will not be another 2017. That was very special circumstances that led to that altcoin bubble of 2017.
Yeah, no, I'm definitely with you, Willie, on those altcoins and shitcoins. And I finally got the site. It's coinmarketcrap.co, not .io and not .com. And there it is. And this is actually how I will love to see all of these altcoins from now on. Have you seen this before?
No, I haven't. No, I have a slide which says Bitcoin, which is of course the maximalist view.
But this is actually pretty funny.
So they don't use the names of the shitcoins?
Right. It's just shitcoin 1, 2, 3, but it's like this one is probably Ethereum, and that one is probably Ripple, and that one's probably Litecoin. I don't know what this is. Maybe that.
Wow, that's
I think the Ripple number 2. It just boggles the mind.
Yeah. Well, what is this? What's $460?
Let's have a look. What's that? What's shitcoin for? Litecoin, isn't it? $143 Litecoin.
Yeah,
9 billion.
What is shitcoin for? Is that Dash?
No, that's 400 is Bitcoin Cash.
Oh, that's Bitcoin Cash. I forgot about that one. Okay,
yeah,
got it.
Yeah, shitcoin Cash.
So it's good not to even know. This is why I really like the site. It's awesome.
Well, they show the circulating supply, so you know what number 3 is.
Oh yeah, that's true. You can tell by that it's very similar to Bitcoin. All right, cool. All right, guys, I actually have to go speak here at Porcfest, so we are gonna wrap this up. Any final words, Willy, and then maybe Tyler and I will speak for 2 minutes about the traditional stock market and gold.
Yeah, not really. I'm just laying low. We've been really busy here at Adaptive, just closing up all of the funding rounds before we go live on, well, pretty much in a week and a bit, 1st of July. So just heads down and quiet right now.
Yeah. All right, cool. All right, I'm also like freezing. I'm in the middle of freaking forest here, and I forgot to bring my sweatshirt out. I have to go back and grab that before I go on stage. All right, Willy, if you want to stick around while Tyler and I spend 5 minutes on gold in the stock market, feel free. If not, we'll let you go and try to get you on again soon.
All right, thanks for having me.
Thanks, Willy. Congratulations. Good luck on the launch.
Thanks very much. Catch you.
Bye, Willy. All right, let's look at gold first. Let's see how it closed the week. So gold popped. Look, from a TA perspective, Tyler, I have to be bullish gold because it broke this Fibonacci line that it couldn't break.
Yeah.
That's from a TA perspective. But I also know that, oh boy, I think my computer is about to die. We're gonna have to pick this up again another time, unfortunately.
Okay. No
Maybe
problem.
tomorrow morning.
Yeah, that sounds good.
All right, guys. I will see you all on the next one.